Hey everybody, William Shishadi here again with Trinity Mortgage. Let's talk about appraisals. Interesting because appraisals have been a little bit of an issue lately in our business. In a crazy market where the sellers have their way because it's a seller's market. The inventory is very low, so a lot of times buyers are making three, four, five offers on different homes before they can get one accepted. The prices are also going up. So a lot of times when you have to get the financing for the home, it also comes with an appraisal. And when an appraiser goes out there and he appraises the home, okay, he bases things or the value based upon what we call comparables. Those comparables are homes that are very close by, usually in the subdivision, that are similar in size and square footage and bedrooms and baths and things like that. And a lot of times those comparables, okay, were maybe sold 2 months ago, 3 months ago, 4 months ago. And sometimes the appraiser cannot get to the price that you paid for the home. So what happens when you pay a certain amount you have a contract and you pay a certain amount for the home, but it doesn't appraise? Okay. Well, here's the way it works. A lender will only lend a percentage of the appraised value or the purchase price, whatever's lower. Okay. Again, let me say that again. They're only going to lend a percentage of the appraised value or the purchase price, whatever is lower. So as an example, if you bought a home and you have a contract price for $400,000 and you're putting 10% down and you're getting 90% financing, okay? So you have 10% down, so you're taking $40,000 and that's your down payment, 10% of 400,000. Well, in the financing, the appraiser goes out there and he appraises the home and it only comes out to 380. Okay, so now all of a sudden you have a contract for 400, but you have an appraisal for 380. Well, the lender's going to say, well, we're using the 380 number. So 10% of 380 is 38,000 that you have to put down. But here's the challenge. You still paid 400 for the house. So you have a $380,000 appraisal, you have a $400,000 contract. Somehow you have to make up the difference between 380 and 400. That's $20,000. So you're already putting $38,000 down for the down payment, but now you have to make up the difference of the 20. So now all of a sudden 38 plus 20 is 58,000. Okay, so again, that difference of the 20,000 has to be made up somewhere. Okay, because the lender doesn't care. They're only going to give you a percentage of the appraised value or the contract price, whatever's lower. Now, there's three things you can do. You can either renegotiate with the seller to get a lower price. Maybe they'll do that. You can ask the seller to lower it to 380 because that's what it appraised for. Okay, but in this market, sellers are like in the catbird seat. They have all the advantages, so they're probably not going to do that. You can either buy it for 400 and somehow come up with the difference of the 20,000, or you can negotiate somewhere in between. But in this market, we often come up with situations where the appraisal does not meet the contract price, and a lot of times people are paying above appraisal, and that payment above appraisal has to come out of your pocket somehow. Okay, so just be aware. That's the way the appraisal situation works per the contract price, and it's happening quite a lot in this market. Once again, thank you so much for listening. Please follow us again on YouTube. We ask that you share our videos. We ask that you subscribe to us and you click the bell so you can get the next video. Please follow us on Facebook and also follow us on either Twitter or Instagram. We're also there. Thanks so much, and we'll see you again. Thanks.